Hi, and welcome back to a second video where I give you a bit of an update of what's going on in the world, in the news, in the markets. And this particular video is really focusing on the real estate market as a whole. We're gonna start discussing some of the things and troubles that I am seeing in the market and why I expect the prices to actually end up dropping substantially over the upcoming months and potentially even longer. So here are some of the things that we do know, some of the facts. So let's talk about facts, and then I will share some of the expectations, and I will try to do this in a very simple way, in a way that I like to process information. I like to share information because I believe that by using a simplified way to explain some complex challenges is easier for vast majority of people to understand. So where we are been since the situation or the virus or the pandemic, however you want to call it, has developed, is that obviously many people have been laid off. Many people are struggling to pay for their mortgages. There's the whole I'm not going to call it moratorium, because moratorium would be a pause, and that's what's happening in many countries around the world. That's not the case in the United States. What we're seeing in the United States is really the ability to claim a forbearance for a short period of time. Typically, they have been told that homeowners have about 3 months to do that. So 3 months is hitting in this month, and if not in this month, for vast majority is going to be in the month that is coming very shortly, in June. Yeah. So this video is being made on May 5th of 2020. That's what today's date is, so that you have a reference, depending on when you look at it, of what makes sense. So, the mortgage rates obviously have dropped. They are lower than they have been, but the borrowing challenges have gone up. So it's much more challenging. Even though the rates are lower, it's much more challenging to qualify for a new loan, and there are actually some borrowers that are struggling to refinance, partially because they have lost their jobs, so they have lost their income. But when we focus on the investor side of things, we have two different things when it comes to investing. You have the long-term rentals and short-term rentals. So long-term rentals is basically when you go out, you find a tenant who's going to be there for 12-month contract. Those are the most typical. So that would be a long-term rental, and that's basically somebody who's renting that place as their home. That's where they live in. That's where they work out of today as well. So that's really what the primary home is. That's a long-term rental. Then you have a short-term rental, which is places like Airbnb, right? That would be the sort of the short-term rental app that a lot of people have jumped on and participated in, because of the potential that you can buy a home, run it like a hotel room where people can come, stay for a night, for a weekend, for a week, and then they leave. And the profitability on a day basis is much higher, because where you could rent the place for, I don't know, $1,000 a month, for example, you might be able to rent it for $100 a night. So you're looking at income of $1,000 a month on the long term versus $3,000 on a short term. And so a lot of people jumped on the short term bandwagon because of the ability to make more money. Now, if you haven't watched any of the videos that I have made about what short-term rentals kind of is and how it works for you when it comes to your taxes and income and expenses, and kind of how all of that is calculated, I invite you to definitely watch that. It is in the feed, so I think it's important for you to understand that, because there are some downfalls of doing short-term rentals from that perspective, even if we were not to account for the situation that we're all living with today. The pandemic has tenfolded the issue for everybody, for every homeowner, for every investor, but particularly for individuals who have short-term rentals. So the Airbnb, the reason I use them, they're not the only ones in this conversation, but because they are the most popular, the largest known, they have the largest number of users, both on the host, basically those that are renting the place, as well as the guests, those that are using the place to go and stay. So because the travel bans and the fears about virus and all of that stuff, all of the guests were able to cancel their stays up until the end of this month. So May 31st is sort of by the time that they can cancel. Full refunds, no penalties, no nothing. Typically as a host, you have this ability to set up whether you allow for cancellations and how far in advance and all of that stuff. Airbnb basically has taken that control completely away from hosts, from owners, and has said, no, we're just going to refund everybody. It was the right thing to do, obviously, for guests. For the hosts, they were not necessarily happy with that because they're using this money to cover their expenses, including the cost of ownership. Most of these homes are financed, and there's about a third of individuals that own 25 properties or more. So of all the users of Airbnb, third of them have more than 25 properties that they are operating under this model. So if you think about it, let's say that on the low end is 25 properties, that means that 25 mortgages go unpaid completely. That's a lot of cash flow that is negative, because there are no guests, there's no income coming in, so they can't service these loans. So they're going into forbearance. And what we're noticing right now, the reports are coming in that aside from obviously losing all of the business and not having any income coming in, they are not able to refinance because many banks are actually starting to pull away from it due to the risk. And even the investors, so those that do long-term rentals, are having a bit more challenge to obtain properties. When it's more than just a single family residence, those are easier to obtain because, again, you're dealing with the longer term rental, and especially if you go with more properties, then it's much easier because cash flow is much easier to calculate. The risk goes down. So there's a lot of benefits to that component. But you know, when you have a single family residence and you're leasing it out on a short-term basis, the lenders are looking at this and saying it's too high risk. So a lot of these refinance requests have been denied for Airbnb owners, which means that the large number of them will end up in foreclosure of some sort, or will have to end up going through short selling. So I expect a really large number of these properties to enter the market over the upcoming months, and it's going to be a huge amount of properties. They're going to range from all over the place, and there's going to be a lot of them, and do expect the prices to start when you have a large number of supply come in. That all by itself can potentially lower the prices, but there's a problem on the demand that I'm going to talk about in a moment, so make sure you pay attention and stay tuned in. So that's what we're dealing with on the short-term rental. Now the problem is also that those that can service, that have had maybe quite a bit of cash put aside, that they can service these mortgages and have been able to pay them for the time over the last few months that we've all been under the lockdown. The problem is that there's a less number of people. The number of people reporting that they are wanting to travel, expecting to travel, being okay with going into Airbnb places and even hotels had dropped by, some reports are saying, about 70 to 80%. That's a huge drop if you really think about it. Of all the people that wanted to, and this is all of hospitality that is dealing with, so hotels, cruise ships, all of that stuff, vast majority of people don't want to be around a lot of people. And so cruises, obviously cruise lines, have this huge problem because you live, quote unquote, with these people for a week or longer, traveling from place to place, so they don't necessarily want to do that. So number of people that want to travel doing that stuff is really down. The second part of the people is those that are going to be staying in hotels and Airbnb properties, is that they are very much concerned about the level of cleanliness. And so while a hotel chain could possibly hire a much higher quality of cleaning, and they might have to follow all these higher rules, it's really hard to trust a total stranger that they're going to go in and clean properly between the guests. And so the question that everybody has on their mind is, who slept in this particular bed, who ate out of this plate, who used this pillow, who used this towel, and was it properly clean? Are all the germs gone? And some of those things you can obviously bring with yourself, but people are starting to choose not to do that. And so well, we're starting to see a bit of a shift in consumer sort of mentality and behavior, is that when people are forced to travel or are traveling for whatever reason, they are starting to choose to go with places that can potentially prove or substantiate that their level of cleanliness is much better. So typically higher end hotels will end up most likely selling at a lower price, right? Because they're, any income is better than no income. So if you have two hotels, one that is a 5-star boutique hotel that can allow all these different amazing things, and one that is like a 3-star that is like but they're the same price, of course you're going to stay at the nicer place for the same price. That's kind of what we're going to start seeing. And where Airbnb is going to start losing is obviously people not trusting it, A, and then B, like I said, vast majority of people not even wanting to go and travel and stay in those places. So the hosts and the holders of the short-term rentals are going to feel the pain. So their pain, just because we're starting to talk about reopening economies, is not going to go away anytime soon. So even those that had substantial cash that could sort of hold on to the place and pay the mortgage and expenses and everything else, carry all of those costs for 3-4 months, which vast majority of businesses could do it for maybe 1 month, which we've surpassed by this point. But even those that could go longer are starting to lose. So like I said, a vast majority of those properties will go up for sale, and those businesses, if they were owned as part of the businesses, will go through the bankruptcy process and complete foreclosure. So that's one part of what I expect to see happening within the real estate market. The second part that I am expecting as well is that there's going to be a lot of baby boomers who, once everything opens up and they're seeing all of the prices starting to sort of tumble, and their plan was to exit these big houses that they no longer need and want. They're wanting to go into something simpler. They're going to go into something smaller. They're going to flood the market with those properties as well. So we're going to see a wide range of properties in size, in location, all over the place. And while I do expect that some of the urban locations may still hold on to some of the prices and demand, vast majority of people in places that are heavily influenced by what's happening with the pandemic will look to go into a bit more remote areas. A place like New York City comes to mind. If you think about it, there's all these people that live in super tight quarters. The price is really expensive. They want something a bit, bigger and away, so that they're not as locked up, that they're not as exposed to all of these things. So I do expect that some of these large metropolitan areas, people are going to start spreading into some of the more remote areas that are a bit less dense in population. And with the oil prices that have tanked, that basically on the futures market that you would get paid to actually buy oil, if you can think about it. And it sounds even funny to say buy oil when you're actually getting paid. So it's a gift with a monetary reward at the end. So the gas prices are going to come down as well in the near future, which makes the ability to drive to a place where you want to go potentially higher. And I also expect that a lot of the companies, as those that were able to sustain, those that were able to keep their employees as remote kind of work from home, they're seeing productivity go up, and they're going to start disposing off of these expensive offices, and will start doing some sort of rotation component where their employees are coming in on a short-term basis, maybe for a week to work, and then they can work remotely for a couple of weeks. And so smaller offices, which means that you are able to do your job and keep your job from much further away. So before, driving 2-3 hours to get to work on daily basis was nearly impossible. But now if you only have to do it a couple times a week or a couple times a month, that becomes a very doable thing. And if it gives you a more space and ability where you can still go outside and do things and have less exposure to this virus, people will likely look to do those things. So I do expect a shift in the way that we purchase and what is desirable to also happen, and that will largely also depend on how the pandemic kind of develops, and if there's any health developments that come in from potentially vaccine or medicine or whatever that ends up happening. So those are going to also influence what happens, and depending on the length of time. But no matter how aggressively they go through, you have to go through all the trials and everything else. And even the most aggressive of the ways, what the doctors are saying, and I'm not a medical professional at all, but I'm just from what people are saying of kind of how that process works, we are looking at 18 to 24 months on a very aggressive way. We still haven't found anything, so the closest of anything that we would even have would be end of 21. That's quite a bit of time that many people are not interested in waiting, so we're going to see this potential shift. That's sort of what my expectation is. The final piece is the desire or the demand of people, and that's a huge shift that also has transpired. There's a lot of people who are wanting to sell, and they're waiting for the economies to open up. And while a lot of realtors have been talking about the ability to do the remote components, ability to do the live stream and they take you around, vast majority of buyers actually want to go in, want to take a look, want to be there in a space, because it's much easier to get like a feel of the space and the size when you are there versus when somebody's taking you through a video, right? So a lot of people that have been on the market, about 78% have reported that they are stepping out of it. They're not interested in purchasing anymore because A, their situation has changed, B, they're not ready to jump into that piece. They're seeing this giant number of people who have mortgages who are struggling. They don't want to deal with that component, so they're starting to back off. 78% is a really, really large number if you think about it. What we're also seeing is there was a new report that was released about a week, maybe 2 weeks ago, from the National Home Builders Association, where they are showcasing the sort of a future trend of kind of where the market is heading. And so where the index has been in the 70s, 75, 77, so it was in the high 70s. And that was a really kind of healthy market of people saying, yeah, I think the real estate is going to do really well, and we're interested and we're moving forward. That has dropped in 1 month. In 1 month, that has dropped down to 30. Last time we were in the 30 percentile was in 2011. So this thing didn't even start until about 2009. So it came right after the crash in 2009. It was around the 10. Right now is about 30. So that's a huge drop if you think about it, going from like 77 down to 30. That's a giant drop in the sort of the, I guess would be sort of like a spirit of how excited we are about real estate when it comes to people wanting to buy, wanting to build, wanting to own. That sentiment really has dropped severely. The other part of the problem is that regardless of the age, regardless of the location, about 80% of individuals are saying that they cannot afford well over 50% of the properties that are currently listed on the market. So they're not interested in buying, they are stepping away. And so all of those things lead me to believe that the market prices for real estate are going to start dropping over the upcoming months. And originally I was talking about like 10 to 30%. Now I am upping that, and I'm thinking it's going to be probably around 30 to 50%, probably a bit more in heavily expensive markets, and probably more for bigger homes, because those typically demand more money, and they typically demand jumbo loans, which the interest rate for those has actually been a bit higher, and it's a bit more challenging to obtain, so people won't be jumping into that stuff. Now, of course, there are opportunities with all of this stuff. When we go into for shopping, part of the challenge is going to be that while the rates, I think, are going to remain low and potentially go even lower, that the lending criteria is going to go higher. So the best thing that I think everybody can do right now is focus on continuing to keep really good credit, continuing to boost up their cash, because I think the larger amount of cash is going to be required to get into these things. So those are going to be the best pieces to think through. The other piece that is probably going to be also interesting one to watch and potentially consider in doing is for some of these McMansions, right, like the large homes that are going to be selling, to have a different business model into buying these and potentially not buying them for your residence. Definitely not buying them for Airbnb, because I don't think that that's a good way to go, but potentially as community homes for the elderly, so assisted living communities. This could really be a good place for you to consider doing, because the prices are going to be low. That housing type is going to be needed in the upcoming decades, and so as long as you can get into that stuff, get a really good deal, then get a really good operator to bring people in, there are opportunities where you can collect anywhere from 3 to 5,000 on a lower end for the homes, all the way to like $10,000 to $15,000 on the higher land and assisted living communities. There's some different math and components that you need to think through, as far as the number of bedrooms that you have, the number of showers, where are the people that are staying there, right, like that are running the place, like potentially like nurses and that kind of stuff, where they're going to operate out of, where the food is going to come from, how are they going to interact. And of course, now a new thing to think through is, if the pandemic sort of continues, or were to continue getting more of them, as they're predicting throughout the medical circles, how are you going to protect those individuals within the homes? But I think there's a great opportunity within that specific niche market, that's something that you should consider, and of course spend a lot of time studying. The second piece that I'm still incredibly bullish on is going to be a tax sale properties. Those are going to go through the roof. You're going to get some amazing deals. They're going to be coming out. Right now, they're still sort of like, you can still find some really good stuff, but it's not as prevalent. But of course, the competition is much lower, so it might make sense to jump in if you can find something that makes sense, because you're getting it at a much lower price than you would have if there was a lot of competition in it. So that's really what I see right now. I hope that this is helpful to you and that you're enjoying it. And pay attention to stuff. Now, the best thing that you can do is continue to stay informed and learn. Study. You gotta study, you gotta keep up with this. Now is the time to sort of sharpen your saw, because when we go out and we get ready and all of these things hit the market, if you don't know what you're doing, you're going to repeat the mistakes of people before you that are struggling right now. And so the concept is to spend time now studying and learning all the different concepts, all the way of how money works, all the way of how we can utilize and sort of layer different things, and how these markets, whether it's assisted living communities or long-term buy, hold, and rent places, or the tax sales, I invite you to go in and start learning from people that are actually doing it, that have done it, that are successful in doing it, to show you the way, to teach you a few things. Yes, it's an investment of time. Yes, it's an investment of money. But, the best thing that you can do to benefit hugely from the market shift that is happening is to actually start learning and start taking action. Many people don't talk about a lot of these things, and that's why we don't see as large of a number of people. About 6 months ago or so, maybe a little bit longer, I've been saying that in the future there's going to be less than 10% of individuals that are going to hold and control all of the assets. And the reason for that is because this huge economic shift and people being afraid, not knowing what they're doing, not knowing how to benefit from it, are going to miss the boat or not being able to afford it altogether. And we're going to live in a world of monthly payments and rentals and that kind of stuff, and that's not necessarily the game that I want to play. I want to own my stuff. I want to have assets that produce money. I want to be able to intelligently protect my wealth and grow it so that I don't have to depend on a job, I don't have to depend on the market, I don't have to depend on economic statuses, that I don't have to depend on a whole lot of things, that I really can become a sovereign individual by protecting myself, my family, my network, my friends, and to be able to really thrive in the upcoming years. Because what I see coming is dark on one end and very scary on the other hand. It's the most beautiful thing that you really can take advantage of that is coming our way. It's sort of like the gift that is being given to us, and only those that know what they're doing, that are aware of it, that are paying attention, will be able to benefit. And I want that for you as much as I want that for myself and my own family. So I hope that you will spend time learning, continuing to learn, continuing to grow. Take those courses, get some of those books, spend time well in learning how to do stuff, and position yourself for the huge wealth transfer that is about to come for those that know what they're doing and how to take advantage of it. Until next time, stay forever money blessed, and do remember, you are only one deal away.